Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Wednesday. And we are sitting here now with June 9th, 2021, about 5:15 in the afternoon. I'm a little early, but why not? Nothing going on here. It's a lot of red behind me if you take a look. And the reason is the market's going into a stall. Now, if you caught my morning flash update, I was making fun and going... And the reason is it was all the volatility coming out of the market. And it was evident all day. Now, the meme stocks, they're still taking off as the list grows of anything heavily shorted or what people that call themselves the know-it-alls on Reddit think is heavily shorted. And they go after these stocks and they drive them out. And people will eventually figure out how to use some put option strategies at certain prices to limit their exposure and try to take advantage of it. Because at the end of the day, some of it just makes absolutely no sense. You were down about 10% in AMC today. We'll talk about GameStop. We'll show the different ones that are here. As we look at the ARK investments, I'm not surprised to see them stalling right in this area. There's a key moving average here. First, you don't have a trend. You have a lower low, higher high. The averages are right here. See that 200-day average? You came down under it. You came up to test it. This is another test of it. Now, if it gets over it, it gets a bit more interesting. Then I think you can say, okay, the market has got to prove it can stay over it. If it does, there could be another area. Now I want to know where the Bollinger Band is, and it happens to be right with the 200-day average. One of the numbers, 115.70, the Bollinger Band, 115.74. The 200-day average, that's your resistance point. Difficult numbers to stay over. That is what my point to you is, and you're overbought on top of it. I don't know what traders see in that, but I'm not seeing what they see on that chart formation. When I come to BBEU, you still got the higher low, higher high, fully embedded reading. When you get this type of reading where the market converts over from being overbought to locking in what we'll call an uptrend until that red line's under 79 on a closing basis, I say the pros are buying the market, looking for either the Bollinger Band or a window envelope. I show the window envelopes in my morning charts. I don't show them here. And I show the moving average where I think they'll come in on the break in my morning subscriber video as well. By the way, we had fabulous turnout today in our What's Up live webinar. There's going to be another one coming out Tuesday. This coming Tuesday. So I'll send the invites very shortly and you'll get plenty of time for it. They're always going to be at 12:30, so clear your schedule now if you want to attend it. I do not post them anywhere on a website. You either attend or you miss it. That's my feeling on it. When we look at PAVE and we take a look at all this, we've got lower highs, lower lows, and the market fighting its battle at the 18-day average. You know the story here. The meeting between President Biden and Ms. Capito failed. Now there's another group of 10 Republicans, part of the G20 as they call it, that are trying to put together a deal. Mitt Romney's all involved in it. But they're nowhere near, from everything I'm reading, what the president wants. They think they can get up to, with everything, they don't want to put new money in, but they think a way to define other monies is nearly $1 billion. That's still 700 billion shy. They can come up with $1 trillion. Did I say billion? $1 trillion, and that'll still put them 700 billion shy of what the president wants. I think this thing has got a real problem right now, and I've said that to you, and you can see the market's run out of steam right here. AMC, you don't fight Bollinger Bands. You can, we don't here. And the trend is up, the market's corrected. Past tense now, it's no longer in overbought territory. Being overbought, that tells me on breaks, as long as you don't get under 27.66, there could be support in the market looking to try to lift back up. What I'm not liking, let me make this ultra clear to you, is while you have the legacy of higher lows, you also now have lower highs. That tells me there's a resistance point, a support point. I'd want no part of that. XSD, when you look at the slow stochastic, still embedded. So if the red line closes under 79, I would say, okay, game over. I want to be away from that as a trader. If it stays over it like it has been, I think the pros are still buying the market, looking for the 181.91, the 100-day average. In PODX, I expected resistance on this first important test right here of the 100-day average in the Bollinger Band, and you still have it and you're still overbought. ESGU, when you look at this, an embedded reading, still bullish as can be. I haven't seen this change. You'd have to get the red to close under 79. Next target, possibly the upper Bollinger Band. There's a window envelope here. That's what's stalling the market out. Again, that's in the morning subscriber video. XLE in the energy sector, be cautious now. You've come up here and now you're starting to get what I call distribution of price. And the market's not trying to push its way through and it's overbought. I'd be very, very cautious on that. On the emerging markets, until the red line closes under 79, I contend the pros are still buying in this market, looking for the higher prices. Interesting that the market is sort of stalled right here as U.S. interest rates are falling. You know, we got down today, I think, under 1.48 in the 10-year note at one point intraday. That was a fascinating look, how the market has gone now from the 1.7 back to the 1.48. Doesn't mean anything. It's just drifting around trying to find out what's next. In the gold market, you've had a pattern to alert you not to be long, with lower highs, lower lows. Now you've got a pattern of still that, but all of a sudden a higher low. I think the trade gets bearish, this market, if you get under 176.37, looking for the possibility of coming right back in here, the Bollinger Band and the 200-day average. Be interesting if it can do it. The bulls will try to support the market at 176.61. If they lose control there, you need to stay down on a settlement, and I think that would seal the fate at this point in time temporarily. Gold miners, not as bearish. Why? Oversold. Very close to the lower Bollinger Band. Been in a downtrend with lower highs, lower lows. Could it hit the Bollinger Band? Why not? Finish the move off. But I teach the first time that you hit that number, I think the pros come out. I think the pros came out yesterday in TLT as the market got up to the upper band. It's higher today, and that's fine. It's not about catching the high. It's catching the meat of the move. And that's all that it was. It never did embed. It's overbought. It's been a difficult market to get long if you filtered in the fact that it was overbought. FXE, so what do you do right here? Well, why would you want to do anything in front of tomorrow morning, 7 o'clock statement from the European Central Bank, that's Central Time, and about 7:30, Ms. Lagarde, the president of the European Central Bank, typically holds a press conference, answers all the reporters' questions. We'll get a better handle then. So my question would be, why would you come into it that fast? So when I look at it, I can see reasons to back off. Now, as you know, I keep mentioning I put out my morning subscriber video, and the reason for that is at 8:40 in the morning, typically, I start recording a 20-minute video. And I go through all the charts. I give the market the first 10 minutes to get all the prices in. I then update the window envelopes that you hear me talking about, and then I start recording. Each Saturday, I put out the longer term charts. So I take the same charts, but only weekly basis. And I'm looking for longer term trends instead of the shorter in and out stuff. Now, short term makes up the long term. You do realize that. The risks on a long term chart traditionally have a bit more risk to them because you've got bigger spreads in them. You're looking at a week at a time, but it's not always the case. I've seen charts where you get the same risk on a daily and weekly. But as I said, I'll give you that. I'll mention the dailies in there, give you what you need. So there's 6 videos a week, each 20 minutes long. What do they cover? Everything. Take a look. I'm really covering a lot of markets for you. The cost, $8.95 to give it a try. After that, you have 3 packages. You can go monthly, or you can even cut that down by going with us on a yearly basis, paying it up front. So it's not expensive. It's there. If you're already hooked on these, give that a try, and then you can always switch to your yearly if you like, but I think you'll like what we do there. With that, I'm Ira Epstein. Go to our website, www.iraepstein.com. Under the word research, this is all explained there. Have a good night.